All right, this moonshot news still reverberating around the market big time. And my next guest says there's no doubt that Kimi K3 has triggered a panic in the AI trade, but the street's getting it all wrong. Joining me now, Francis Newton, Tuttle Wealth CIO. First of all, it's great seeing you. It's been a long time. You look fantastic. You look fantastic.
Thank you. That's the right answer.
Let's talk about this because, it's gotten people afraid. It's gotten people angry. Their folks are at odds with each other and how to deal with it. What's the key here? What parts of it do you think, at least from an investing point of view, people are getting wrong?
So it doesn't kill the AI trade. What it does is it expands usage. What it kills is the exclusive model coming out of the US trade. Now, when you think about bringing in competitors into the marketplace, you think about lowering prices, but it expands usage and it's going to make it more competitive and probably cheaper. But the message is geopolitical, right? This is well-timed. We have this sort of chess match going on in the background about Chinese GDP. And the Achilles heel for Trump is yields. And so this release was far ahead of really, it's pending.
Right.
So anyway, it doesn't change the
To your
AI.
point, this was in conjunction with an event President Xi had with a bunch of other countries sort of saying to the rest of the world, hey, we're going to democratize this, ironically. U.S. won't be the only player, and if you come with us, we've got your back, so to speak.
Exactly, because when you look at like the export controls and all the leverage in the trade negotiations, now you're not U.S. model dependent. If this really works, it's still pending. We'll watch it. It expands usage, which gives other companies, inference, throughput type companies, opportunities.
Let's talk about some of the other issues, though, bottleneck risk and things like that.
So you've got memory, obviously, and that's a volatile trade, right? Because then it becomes a valuation discussion, a bubble discussion. But the thing that we, over at Tuttle are thinking a lot about is the heavy asset, low obsolescence. What does that mean, okay? If you add
the halo trade.
The halo trade, right? And it's like, if you add AI to your railroad, great, it's going to make it more efficient, but it's not going to disrupt the railroad. You're not going to get rid of the tracks and the train, right? And so when you look at infrastructure, water, power, voters and the politics around data centers, all of that's going to affect that infrastructure. But that infrastructure, wherever the AI trade goes, wherever the next bottleneck goes, whether Kimi 3 comes online or not, that power is necessary. And so that's the long-term play. And
that is really the good news. The silver lining in this whole thing is that it kind of it augments the AI argument, and from an investment point of view, it doesn't, diminish it, even though that's not what you would have thought from the stocks initially.
And so you've got to be active and tactical when it comes to like the memory bottlenecks, because those things are moving around and it's the valuation justification. But when it comes to the infrastructure, that's a long-term play.
You like CBRS, Cerebras? How do you think?
Cerebras, I don't know.
Cerebras,
Your guess is as good as mine.
And let me tell you, I'm watching it like a hawk. Because the IPO it gapped and then it came down. I know they're doing revolutionary things. I know at some point this stock is going to be a buy. Today's action, though, is really compelling. The intraday reversal after a sloppy opening, to me, feels like something of a buy signal.
Yeah, and it could be bottoming right here. The thing to watch about this is if the AI throughput and the usage expands, then this company has an opportunity. Obviously, they're doing inference clouds and they're doing all the different clouds and all of these, when you have a plethora chasing pricing models and mechanisms and you have more competition in the market, companies like this have an opportunity.
CBRS for the radio folks.
And it's not already overblown, right?
So you're not chasing it. If you had patience, you got a chance to buy this.
Nice little chart there. Look at this bottoming pattern. We like it.
That's a beautiful chart. By the way,
this is easier to trade and be tactical than the undercut rallies on memory, which you've just got to be so quick, right?
You got to be quick and maybe have a bottle of scotch. We got less than a minute to go. By the way, you guys have a Halo ETF, HALX.
That's right. Yep.
I don't want to let you go with just 30 seconds though, without getting the other risks. You're really kind of concerned here about interest rates, yields, maybe the Federal Reserve.
Yeah, I think the Federal Reserve is going to hold ahead of the midterm elections, but the bond market is doing their job for them, actually. It's pricing in the yield hike ahead of the Federal Reserve meeting, and I think that's why he's gotten the task force out and looking at liquidity and communications around that particular problem. Oil, buying the dips in oil, expect inflation to be reflating into the end of the year. AI stay tactical. I mean, one of the things that we do is at Tuttle Capital Management, we have a lot of active management internally in the ETFs. We've got a trading desk, and on the wealth side, all of that active management's happening inside the ETF, so we're not buying and selling people's portfolios. So,
great stuff. It is so good seeing you. It's been
nice
far
to
too
see
long.
you. I
All
know.
right. And you hooked up with a great guy. Matt Tuttle is really a brilliant guy.
he's my favorite.
All right. I thought I was.
You didn't pay me that much to say that.